In this module, we will review CHC's Flexible Spending Account, or FSA. An FSA is a benefit which allows you to set aside dollars from your paycheck on a pre-tax basis to pay for medical, dental, vision, dependent care, and even some commuting expenses, especially if you already anticipate incurring eligible FSA expenses during the year. It could benefit you to pay those with pre-tax dollars instead of after-tax dollars. During CHC's open enrollment each year, you may make FSA elections for the upcoming year and then fund your FSA via payroll deductions throughout the year. For the healthcare FSA, the IRS provides a list of eligible expenses. When you incur an eligible expense, you submit a claim for reimbursement from your flexible spending account. To administer those claims, CHC contracts with the nationwide FSA administration firm Ameriflex. To make your claims process easier, Ameriflex provides each healthcare FSA participant an FSA debit card, which you may use at the doctor office or other vendor for payment of the expense and automatic debiting of that charge from your flexible spending account. This works very well for common expenses with fixed copays, such as prescription drug purchases and office visit copays, while for other expenses, you will need to submit claims to Ameriflex for reimbursement. For 2021, the IRS limit for healthcare FSA elections is $2,750. You may choose a lesser election amount should you wish. Once you make your annual election amount decision, you may not change it during the year unless you experience a qualifying life change event. However, because you have elected and therefore committed to this payroll deduction amount for the year ahead, your full year's election amount becomes available for you to use as early in the year as you may need. At the end of each calendar year, if you have not fully spent your FSA election amount for the year, a grace period through March 15th of the next year is made available to incur eligible expenses to spend your remaining FSA dollars from the prior year. Once the grace period has ended, you may no longer spend those prior year FSA funds, and they will be forfeited. Claims for prior year FSA expenses, including expenses incurred during the grace period, must be submitted by March 31st. Dependent Care FSA is a separate FSA account to set aside pre-tax dollars to pay for dependent care expenses so that you may continue to work. These can include child care expenses such as preschool, before school and after school programs, and even summer day camp. Child care expenses are eligible for children under age 13. Adult care expenses are eligible when incurred for an adult relative living in your home who is physically or mentally incapable of self-care. Unlike healthcare FSA funds, dependent care FSA amounts are only available for reimbursement after they have been payroll deducted. But should you wish to change or cancel your dependent care FSA election amount mid-year, the rules to do so are not as restrictive as they are for the healthcare FSA. For 2021, the IRS limit for dependent care FSA is $5,000 per married couple filing a joint tax return, or $2,500 for an individual or married person filing separately. The commuter FSA, also known as transit FSA, is limited to certain commuting expenses, including bus, subway, train, ferry, and van pools. Also eligible are parking expenses if spent for parking at or near work or at or near public transportation for commuting to work. For 2021, the IRS limit on commuter FSA is $270 per month. IRS FSA rules and a list of eligible expenses may be found in IRS Publications 502 and 969, so please consult those for additional FSA details. And should you wish to review your CHC benefits or see plan benefit summaries, please feel free to log in to your personal CHC's online benefits portal at any time. On behalf of CHC, thank you for watching.